Joining in right now is Neeraj Kumar, the Group CEO and Whole-Time Director at Jindal. So, thank you so much, Mr. Kumar, for taking time out. To begin with, tell us how are you managing your margins in light of the fact that metal prices, for the most part, are on an upswing. The third quarter did see some pressure. Is there an inverse correlation compared to ordinary metal players?
Good morning. For our margins, essentially, we have a hedging strategy because a lot of our projects are uh, driven over a large period of time. So the moment we win a project, we try and lock in our raw material prices. That is for the plates and the coils. As far as the iron ore, which is the raw material for our ductile iron price, we have long-term contracts. So we do have a firm strategy in place to manage our raw material prices, because as you know, it's a major component. In most cases, it's about 50 to 60% of the cost is a raw material, and therefore we pay a lot of attention and make sure that we manage it well.
Okay. Now, the growth in your sector has been fairly strong, and we've also seen that on a variety of factors at play, the government orders, etc., the state demand on river linkages. Can you tell us about the various segments of your business and what kind of growth you've seen?
Jindal Saw, as you know, we are a dominant player in the pipe market through the entire spectrum, which is based on iron and steel as a raw material. So we do have seamless tubes, stainless tubes and pipes, ductile iron pipes, and large diameter pipes. So if you look at all of these put together, it caters to a very, very wide variety of customers and wide industrial sectors. So oil and gas is one sector which is now reasonably doing well. You have some tenders come from GAIL. Water sector, large diameter water sector, is one sector which is seeing a lot of traction based on the government initiatives, whether it is the Amrit scheme, whether it is the state grid that most of the states are now coming up with. And for ductile iron, the cities, there is now a lot of investment that is getting into the infrastructure development. The industrial sector is also doing well, where our seamless and stainless pipes and tubes are largely used. So all in all, yes, we do see a healthy demand on all the sectors that we are catering to.
Let's also talk about the various segments of your business, starting with water, where there is good potential clearly. Tell me, what are the kind of growth projections that you have as internal targets?
Internally, as if you see, we are now looking at close to 20% year-on-year growth in these segments.
How has the government procurement policy then helped you? Because this entire Make in India theme and how the large companies setting show here have been able to procure a large part from local players as well. Because we understand that agri is also a very strong thrust area of the government. That's a very key segment for you. So how much is the incremental growth coming from there?
The Make in India policy has made a few things very firm and clear, which has advantaged most of the domestic players, because now the policy is clear. You have to have a minimum 15% value add in India. If there is enough capacity and competition in India, then the government agencies have to focus on buying from the domestic sector. So that has helped the domestic sector, and it has kept the Chinese dumping at bay in a few important sectors. Primarily the seamless tubes. There, at one point of time, the Chinese almost could take care of around 40% of the entire requirement. Now that has come down very significantly, and all those now demand have come down to the local players. So that's how, if you see in the pipe industry, most of the players have been doing reasonably well, and they all are carrying a healthy order book at this point of time.
Right. And can you also give us a sense as to what the outlook is with the industrial growth? Because that's gradually coming back. You have a segment in industrial applications, mainly power. How is that shaping up and what kind of potential can we see?
We cater to some specific industrial sectors like automobiles, which is showing a very healthy growth, power, refineries, people like ONGC. There is also a lot of replacement demand which is coming. And then there are value-added segments where the high end of the alloy steel and the stainless steel pipes are used. So in those sectors, we are seeing a good demand, both on account of growth as well as replacement demand.
All right, Mr. Kumar, we'll let you go on that note. Thanks very much for taking time out and joining in, giving us a sense of how things are shaping up for the company as well as the kind of margin trajectory as well.